We start with 1 hour chart. Just I want to give a quick update. First of all, if you refer to my last analysis, since the price was within this move exactly here, we mentioned we're looking for one move up, and then from there we are expecting the price to drop exactly as what we expected happen. And we mentioned how we can look for trade. Anyway, even if anyone get the trade, they should take out the trade in the break even, because we mentioned if we get any trade, we are not going to keep the trade more than 2 hours if it's not moving in our direction, because we were expecting the price, if we wants to look for the trade for buy, we're expecting to look for the trade as a short move, not the corrective move. Anyway, as what we expected, we get one move up, the price drop. Now we want to see what's the next. We don't need these lines to be there anymore. All right, that means we shouldn't be in the trade. And now we mentioned we are expecting the price drop to 0.23. That's means 23 cents. As we can see the price tag, now we want to see whether we can expect the price to break, or the break the 23, or we are expecting the price to reverse. First, we want to see how we can look at this correction, because we want to see whether we can put this correction in relative to this for one more drop or not. Okay, because we need to see the breakout of this correction either up or down before we get there for the next move. And the first option, we can look for this correction as whether we put this one as a 1 2 3 as internally, and relative to this 1 2 3. And in that case, if you want to put this one in relative to this is the first option, which I'm not really agree with this option. That's why I mostly prefer to go move for the second option. That means we're looking for this one. Mostly I'm looking for the second option in relative to this as a 1 2 3 in the bigger picture. Now we need to look at this part, because the most difficult part, how to put this one in relative to this correction. That's mean 1 2 3. All right, that's mean if the price cannot break 23 cent, any trade within this one, if there is no breakout of the 23 cent, any trade within this one for buy, we will take it, and we're looking for the 25 cent as a target. Then from there, we want to see if there is a breakout of the 25 cent, we keep the trade. If not, we take out the trade, because we put this one in relative to this. And what we want to be sharp, not the corrective. We are not going to look for the trade as a corrective move, because we want to put in relative to this. If there is a breakout of the 25, we keep the trade. If not, we take out the trade, because we can expect to get one more drop. Then before we get the reversal. But if we want to go with the first option, the best things is we see the breakout of the 23 cent, because if there is a breakout of the 23 cent, then we've confirmed the correction, breakout of this correction relative to this first correction and the last. Then any reversal from there, we will take the trade. Mostly we prefer to look for the long-term trade. Either we see the price drop, break 23 before we take the trade, or we get one move up before we get the next move. That's why if we get any reversal as a short-term trade, mostly we prefer to trade it either based on a 1 hour or 15 minute. We take it. If we get any buy, if there is a breakout of the 25, we keep the trade. If not, we take out the trade, because we can expect for one more drop before we get a reversal, because we want to see the confirmation of this correction. And how about if the prices start to drop as a corrective move? At that times, the only ways we're looking for the reversal, because at that times we can expect the price to drop 23 cents, because just now we explained about the 23 cent, either the breakout of as a sharp move or as a corrective move. But if we want to put the first wave include with the last wave, we prefer to see the breakout as a sharp move, because if we see the breakout as a corrective move, we need to look at this entire structural correction differently. Okay, and if I move to daily chart, still we can put this one as a correction in relative to this. That's why 23, we're looking at the 23 as a support. We want to see whether we can get the breakout or not. Because if there is a breakout, as I mentioned, we prefer to look for the long term. Rather than that, we have nothing else to discuss. And right now, any trade we consider as a short term from what we see here. And still we're looking to see the confirmation of breakout of this correction. How to look, as I mentioned, we have two different ways we see that. We can look at the chart, and the best thing, we cannot see the best things. If there is a breakout and there is the price drop as a correct sharp move, we go with the second option. That's mean any reversal is a for long term. If not, any reversal, if there is no breakout of 23, still we consider as a short term buy, and with the target of 25 cents. Anyway, Even if I move to 1 hour chart, we don't see any reversal or any trade setup for buy. And in this case, we just follow the chart. And again, I need to highlight, we're looking for the sharp move. If the price reverses a corrective move, this is not what we're looking for. That's why we have the strategy. If we're using the flag, sharp move flag, if we get a trade, we are not going to keep the trade more than 2 hours if it's not moving in our direction. The only times we keep the trade if we can move our stop loss to break even and just let it go. Anyway, we just follow the chart. If I see any update, I will share. Thanks.